We recently celebrated our 5-year anniversary here at the Art of SBA Lending. That's 5 years of providing unfiltered, expert advice to small business lenders, and that's earned us a lot of trust with our listeners, so much so that they call me for career advice. Now, I know there's also a lot of leaders throughout the SBA industry who are constantly looking to source great talent, and that's why we created SBA Jobs Board. SBA Jobs Board connects hiring managers of the SBA industry who are actively searching for their next great hire with my highly engaged audience of SBA lending pros. The SBA Jobs Board is live right now on artofsba.com. If you're a hiring manager, you can go in and post a job for just $99. If you're listening to this and you're ready to start the next chapter in your career, go check out the available positions. Visit artofsba.com for more information. Today, we're going to be going behind the curtain with the CEO of probably the largest LSP in the SBA industry, Windsor Advantage, whose parent company just completed a merger. Ladies and gentlemen, we have Michael Breckheimer on the podcast today, and he's going to take us behind the scenes of this recently completed merger, as well as give us a glimpse of what it's like running a large-scale LSP. So stick around. You're not going to want to miss this episode of The Art of SBA Lending live from Las Vegas, Nevada. Okay, it's not live. Anyway, here's the interview. Lumos gets brought up on just about every episode these days because they are changing the way SBA loans are underwritten, especially small loans. So I wanted to take a second to explain the power of Lumos. So here's how it works. Lumos' scoring model, Prime Plus, leverages over 1 billion data points to come up with a predicted expected loss. So now you can quickly and efficiently decision each new loan request. Guys, we're talking about auto decisioning on small loans up to $500,000. They'll even sit down with you to build out a customized credit profile that matches the risk tolerance of your specific institution. Lumos is defining the next chapter of SBA lending, and it couldn't be coming at a better time with the rise of the small loan program. By the way, you can use Lumos to score your existing portfolio too, so that you can see where the weak spots are before there's a problem, and that way you know where to focus your resources. Let Lumos take your small business lending to the next level with cutting-edge analytics by going to lumosdata.com and scheduling your demo today. We got the Vegas Strip behind us. Got the Eiffel Tower.
Not too shabby.
Which was great because we had Brent Cherlino on. I'm saying that right?
Cherlino? Yeah. Oh, yeah.
Okay, cool.
You got it right.
He invented Paris scores?
Yeah.
And we had the Eiffel Tower behind him.
Perfect.
So it was perfect. But you know what? This episode's about you now. So Mike Breckheimer.
We can talk about Brent all day.
That your name is like, it's like the name of like a CEO. You know what I mean? Like that's a strong name. It's like a power name.
I think that's a beyond power compliment, but I appreciate that. That's good.
Right off the bat, I got to hear about this acquisition. Like, what's going on?
So yeah, effective October 1st, Windsor Advantage was acquired by Capital Bancorp out of Washington, D.C. An incredibly entrepreneurial, great group that has really been able to evolve themselves into a tech-enabled, you can call it a community bank, but really I view it as a thought leader in a business bank. They have, multiple different product sets, multiple facets of what they offer. They also have a really innovative tech-enabled credit card platform. And so we were originally approached, I think I can say all this now, right? Roughly a year ago. It was announced prior to that Windsor Advantage was going to be acquired by another bank holding company out of Washington, D.C. I'm sorry, out of West Virginia. And unfortunately, that fell through. They were equally innovative and fintech focused, great partners, which we've always felt was necessary for kind of a new ownership structure. We needed somebody that would be a thought leader. We needed somebody that would invest in tech, invest in Windsor's value-added infrastructure, but also really supported and embraced, the 7A platform. And we found that in Capital Bank after, unfortunately, the other merger didn't end up working out because it happened in the middle of Silicon Valley Bank and the markets going round and everything else. So we were introduced to these guys, roughly a year ago. We obviously dated for quite a while. It was a somewhat complex merger in the sense that we were an FDIC regulated organization under IFH, who had owned us previously. We originally exited to them in 2018, and Capital Bank Corp was a or still is an OCC regulated organization. And so we were interested to see how that would go, but it ended up going with flying colors. And again, like we talked about, it went live October 1st. We now have grown into nearly a $3 billion in asset institution. Windsor continues to remain a completely independent holding of the bank corp, right? So we're a single member LLC that continues to stay completely separate from anything involving Capital Bank NA, which is a lending institution that focuses on SBA 7A. But we're now able to leverage additional investment, technology enablement, and really an entrepreneurial bank holding company that has had a massive amount of success growing other verticals that are unconventional, right, to community banks. So they've got this really cool credit card processing platform called OpenSky, which essentially helps. It's a lot like small business. It helps individuals build their credit from maybe subpar scores. Maybe they had a life event or had never built it before, and this group has been able to invest in technology and really expand this platform to build cash secured credit cards and been incredibly successful with it. And so, a long-winded way of saying we're incredibly excited. And when we saw that this larger institution had already invested in thoughtful platforms like cash secured credent cards, we knew that they'd be able to embrace an LSP. Keep us
it tells you a lot about their willingness to be innovators, and thought leaders, and
exactly.
Oh, that's very cool. So together, all the companies now are $3 billion in assets.
Yeah, exactly.
So Capital Bank how big were they before?
So Capital was like 2.5, right?
Okay.
So IFH was basically a $500 million organization with both the bank and Windsor itself, and now we've rolled up together. We're roughly a $3 billion organization.
Does that mean they paid $500 million?
Yeah, right. 1-to-1, totally. Best
Okay.
deal of all time.
I don't know how. Let me ask you this: How are LSPs valued?
Yeah. Good question. So typically valued on a multiple of earnings, right?
Oh,
so
like a lot of companies.
Yeah, exactly. So service-based organization, right? Multiple of EBITDA.
Okay.
So it's a little bit unique in the sense that we came kind of as a bundled deal with IFH as a holding company. So not only are you valuing Windsor, but you're also valuing, the value of that bank charter itself. And one of the big core competencies that IFH has always held in government guaranteed lending is actually USDA, right? So Capital Bank has now absorbed, in addition to Windsor Advantage being, an industry leading GGL platform, an industry leading USDA platform, both in the renewable energy and non-renewable energy space through Westtown.
So by the way, is the price public that they paid?
The price is public. I'd have to go back and look at the last kind of where it settled, because it was a cash and stock transaction. It was a mix, but it was a pretty decent return for both shareholders, and so far I think Capital's happy with it. Because
IFH bought Windsor, and then now they've sold and they've also bought Westtown Bank.
So IFH originally was a bank corp, right?
We need like an org chart.
IFH was a bank corp, right? So originally Westtown Bank Corp, which owned Westtown Bank and Trust, which was a large client of Windsor's. We exited to them, meaning the bank corp, in 2018.
Oh, so your client bought with you.
Spot
basically.
On. And then we rebranded and we put a bunch of other bolt-ons on over the years and built up IFH into what it sold at, which was roughly a little over $500 million as a whole. And then that got rolled into Capital Bank Corp. And so when you think about the way those transactions occur, it was a little more complex than a standard community bank transaction, which trades at typically like a multiple of tangible book value, right? This involved both buying a service-based entity, right, which trades at a multiple of EBITDA, and then also bought a bank
Which is
charter, which trades at a multiple
like
of
2x book value or
you got
whatever.
it, you got it,
Okay.
spot on. So yeah, the overall transaction
Interesting.
price,
Well, that's
I
a
believe
fun.
is public.
Were you
Yeah.
involved in the deal of the whole like kind of negotiating it? And
Yeah,
stuff like
no,
that?
I mean, we all were, right? I mean, the executive management team was incredibly close at IFH. We unfortunately had a deal fall through prior, and so we weren't expecting to sell, frankly, so quickly after the Silicon Valley Bank debacle and the community bank. Earnings in general, dropped back in just a year ago now, almost, right? March of 2022, which was kind of crazy. Maybe 23. Sorry, 23.
Yeah, a year and a half then.
Yeah. But no, we were all heavily involved, right?
So what does this mean for you now?
I think it means more opportunity to be able to serve our clients. And I mean that wholeheartedly, right? We have now joined a larger organization with more scale, more tech development talent, right? More ability to invest in service-based offerings for our clients. We've typically been, pretty turnkey. We're going to continue to stay that route, but we're going to be able to offer more and more transparency within kind of the overall interactions with our clients. We're going to be able to offer more tech offerings. We've already had 2 separate fact-finding missions about like, okay, now that we're a bigger organization with a little bit more infrastructure, how can we expand additional products? How can we expand additional technology offerings? How can we make sure that our clients are getting best in breed, not only in service, which I think they've always had with Windsor, but also within kind of the technical aspects. So I think we're going to see Capital Bank Corp really press Windsor on making sure that we are a industry leader, not only just in the LSP field, but in the overall commercial loan servicing field in the near future here, which will be cool.
I have a prediction.
Yes.
You're going to change your name to Windsor AI.
That is not off the table. I don't think the rebrand will maybe hit, Ray, but I do think we will be looking at ways to integrate AI. We're looking at ways already to work on machine learning. We're looking at ways to make sure that we can continue to service these banks in a way that frankly LSPs haven't been able to service them before. It's pretty cool.
Yeah. What is the LSP market? Is it like there's like a couple big ones? Are you the biggest? I mean,
I think so. It's not
like there's not rankings.
It's not public, right? Like the SBA doesn't public it, but so Windsor, Windsor has roughly at any good given time 100 to 120 clients kind of under contract that we're working with. We currently service $2.5 billion of SBA huge. And USDA debt, and we close anywhere between $300 to $400 million of loans a year. I mean, when you think about that, the lead tables, $300 to $400 million. Yeah. If we were a single balance sheet,
like top 15,
we're obviously not. You got it, spot on. So yeah,
interesting. So, and then because there's also a lot of small ones that don't even really try to scale.
Yeah,
that's like it's a really interesting market.
Yeah. It's I think that's really the difference where we play. Everyone's got their niche, right? Everyone's got their focal point in areas. I think what Windsor's been able to do over the years is use its scale to invest in, the ability to help our clients grow.
Yeah.
And not to say that others can't by any means, but to your point, there's plenty of different sizes of institutions that fit different needs. And I think we've been able to really invest in the people, process, technology, and infrastructure to be able to support clients of any size and be able to frankly support unit volume of any size. I think it's a shameless pitch to ourselves here at Windsor, but we just kind of seized the opportunity that when we got big enough and could make the spend and risk mitigation tools, technology, infrastructure, and people, we did it to be able to support those that say, hey, we've been running the gamut really well at 20 million, but now it's time to grow to 100 million. There aren't many organizations out there on a third-party basis that are variable cost that can support that. We saw that as an opportunity, and we did.
How did you first get involved with Windsor?
Unconventionally. So I started, my career in larger banking and capital markets, actually with National City Bank, which then got acquired during the downturn with PNC Bank. I ended up going to management consulting for a little bit, working with banks specifically. I've always been in financial services and banking. And I met the founder of Windsor back in 2014. Got introduced to him. His name was Sean Andrews, an incredibly good friend of mine. He's one of the best business minds I've known. And we got to talking about the business model. And at that time, I just saw it as such a mix of the last two careers I had, whereas we really approach our jobs as management consultants, right? We really make sure that we dive into strategy. We focus on the ability to grow our clients' visions. We always say we try to be a partner, not just a provider. And to me, that screamed what I was already doing, right?
Mm-hmm.
But at the same time, I always had that itch where I originally started, which was the capital markets, right? And so I'm talking to this guy that had, highly impressive, highly energetic, started his own company, was entrepreneurial, and had this unique niche product in 7A lending that could make community banks a ton of money, right? So we can empower the little guy, which I thought was pretty cool. Retrospect, right? Little to the big four banks, right? And not saying
like a cool $1 billion bank.
Right. Like, billion to 40 billion, right? Compared to the T. And it just kind of spoke to me in the sense that we could build something together that was entrepreneurial. We could build something and have some fun doing it and really own what we were doing, right? And really kind of target a market that hadn't been approached with that level of sophistication with respect to kind of the investment banking world or the management consulting world or things like that. And took a risk, took a run with it. I think we had like 12 to 13 employees at the time. And, here we are today, 2.5 billion in assets, and Windsor is, 70-ish employees with 3 brick and mortar offices. So it's been a good run.
If you've been a fan of the show for a while, then one of my favorite companies to work with is Rapid Business Plans. Last year alone, their business plans helped facilitate over $600 million in government guaranteed lending. They're on track to beat that this year. More and more small business lenders and their borrowers are relying on Rapid to help with the business plan, projections, and assumptions because their team goes the extra mile to ensure everything is done fast and done right. And that helps streamline the process. They're great at export business plans, by the way, which are critically important at protecting that 90% guarantee. Rapid also offers feasibility studies, which tells you if the project is, feasible. I would recommend these for any large startup loan because it protects you and it protects the borrower and helps you get more good deals done. Go to rapidbusinessplans.com to set up your Get Acquainted call today. Find out why so many top producing BDOs recommend Rapid to their small business borrowers. We're going to leave a link in the show notes just for our Art of SBA listeners. Now let's get back to the show. What was it like at Windsor when you first got there?
Entrepreneurial, right? Energetic, intense, long hours, but super fun, right?
Was it this big?
No, it wasn't, it wasn't this big at all. It was, I think we had probably like 30 to 40 clients. So still pretty big. Like you got to,
so it's like 4 or 5x or so.
Yeah, exactly. Especially in terms of size. It was already, I'll give them credit, right? It was already incredibly profitable, incredibly successful. But we've year over year been able to put more and more clients on the platform with a great retention rate and grown it exponentially, to your point. I mean, if you look at just a client count, if you look at asset size or, assets under management, or another way to say it would be like, unpaid principal balance serviced, we've probably gone, 4x since 10 years ago.
What's been the hardest part about scaling an LSP?
The hardest part about scaling an LSP is ensuring that you don't lose service, right? It's really easy to cater towards the unique needs of each one of our clients when you have a small client base and you can get with them daily. You have to be able to invest in the people and the technology to be able to continue to offer white glove service if you're going to sign up 100 clients, right? I mean, it's just, it's a scale thing. You need to make sure that you continue to grow your infrastructure at the same level that you're growing your book. If you don't make that investment, then your service will start to kind of deteriorate, and you got to make sure that doesn't happen. So,
and the infrastructure is like people, basically.
Yeah, spot on. I mean,
it's people business.
We've got a significant investment in tech, right, and a very significant investment in security, right. We take compliance incredibly seriously.
Yeah, I guess that's kind of important to things.
right. When you're managing 100 different clients. But to your point, we're our people. I mean, if your people aren't bought in and you're not constantly investing in their success, their growth, their training, making sure that they have the tools that they need to serve your client base, it's not going to be, it's not going to be a success. So you really have to be able to invest.
And
in
how
those
do you
people.
how do you do that? Like, how are you sourcing talent?
Yeah, good question. We have an incredible recruiting team, right? Through originally, inherited through IFH and now through CBNK. They really focus on the profile of the type of individual that we want to see as part of a team member. I always say, can you sit down in a room and have a conversation with them? We hire hungry, right? We hire open. And what I mean by that is open-minded. Windsor does things differently, right? We want people that want responsibility. We don't want people that just want a job. And so it is as much about the SBA background as it is about the desire to want to grow something together. We've been around for a decade, but we're not stopping anytime soon. So we are constantly looking for those that maybe have been at a bigger shop in the past, like myself at a KPMG or a Nat City or a PNC, and want that ability to really feel like they own something, right? That they're a name, not just a number. And those individuals that tend to embrace that passion, that culture, and can communicate tend to be very successful with us. And so we work very, very hard with our recruiting partners to make sure that we ask the right questions, right? What do you feel about being a self-starter? Can you problem solve something without a massive amount of instructions? It's not that we don't have it, but we want people that enjoy putting together puzzles, right? We want people that enjoy self-starting.
Well, that's a huge best practice that probably all the banks can learn from. Because I didn't hear you, asking about their SOP knowledge.
Yeah, we actually, at times, Ray, depending on the role, stray away from that.
Really?
We've tested those waters before.
Hiring from existing SBA talent.
Yeah.
So how much of your staff is not hired from scratch?
I'd say 90,
like not from non-SBA.
Yeah. 90%. Yeah.
Wow.
There are certain roles where you absolutely want somebody that's kind of gone through the ringer and the training manual with the SOP.
Right.
Especially kind of along the lines of compliance, risk mitigation.
100%.
Yeah. Underwriting, things like that. But no, I mean, those that have client-facing roles, typically I look for people that are hungry, good communicators, a lot of management consultants, a lot of problem solvers.
Interesting. Management consultant.
Risk consulting is big, right?
Huh.
You look for a lot of talent that can communicate, but also can kind of look at the big picture and say, all right, what am I doing that is in the best interest of the firm? And what I mean by that is, Windsor's the firm, but we are an extension of our clients, right? We approach each client individually by understanding their credit appetite, understanding kind of their risk tolerance, things like that, right? And so you need people that can empathetically put themselves in the client's shoes and the client's position.
Yeah, you got to be customer focused.
Yeah, but the SOP, as long as you don't need to drop someone in head first, I mean, we don't give them a loan like on day one,
right.
right? I mean, that we have a pretty rigorous training program.
We do, but a lot of people do. In
Baptism by
industry.
fire. So no, I think it's making sure you hire for culture first, right? And then if the person is motivated and has the right culture, then you can teach them the SBA skills that they need to really offer industry leading service. That's typically what we focus on.
Well, hire for culture? How would you define your culture?
Entrepreneurial, hungry, and we've had this happen, right? I mean, if a passionate individual comes to us and says, "Hey," and this is totally cool, right? But like, I'm getting tired of this role. However, I like being here, and I think we have an opportunity in, I don't know, client development or risk or servicing to be able to like expand my skill set. We embrace that wholeheartedly.
Awesome.
Right. I mean, lateral movement is the greatest strength we can give, our colleagues. And I think that imagine being able to cross train a closer with somebody who's specialized 5-10 years in liquidations. I mean, think about, they're like an SOP ninja.
Yeah, exactly.
Like literally they understand both.
It's like cheat codes.
Yeah,
like,
exactly. And we try to embrace that, right? So if you build the right culture,
yeah.
We've got groups that have almost entirely shifted themselves, right? They started out as processors or packagers, and now they're doing portfolio management or liquidation or other things. And so I think that cross-functional training in the SBA space is just critical.
Yeah, that's interesting.
Probably like why we're pretty good at what we do is because they understand it from both angles.
Yeah, you don't really see it that much. I feel like underwriters are underwriters, closers are closers.
Yeah, spot on.
No one's really switching seats anytime soon in the bank. If you're working in a bank, how is that different than working at an LSP?
Areas are very similar, right? With respect to general skill set, right? You got to close a loan compliantly, whether you are just closing loans for your institution or if you're closing it for 30 institutions. So on the technical skill set, it's pretty similar, right? It's the same. On the customer and relationship management skill set, it's very different, right? We at Windsor, make sure that we understand each one of our clients' cultures, but then those individuals have to balance that, right? They have to understand, bank ABC may close a loan completely differently than credit union XYZ. And they've got to be on their toes, right? They've got to make sure that they understand the policies, procedures, and controls set forth by our clients because we're just an extension of them, right? Our clients outsource a lot of the work, but they don't outsource the control, right? They don't outsource the oversight. Right. They have full transparency in what we do. And so, a closer at an LSP has to manage a lot of relationships, right? As opposed to a closer directly at a bank that maybe only has to manage, 3 or 4. That's
a really good point. And is everyone in the office over at Windsor?
Yeah, so we have a hybrid schedule now. Okay. Post COVID. So we have like a 2-day off, 3-day on, depending kind of in pods, right? So we have different closing pods, portfolio management pods, liquidation pods, servicing groups that will all be in the office together. And then we typically try to make sure that those always overlap so that the entire organization is at least repeating one day together. So we try to be flexible. We try to offer that hybrid culture and ability for a lot of our colleagues to kind of have that freedom and make their own schedules on those specific days. But we're at least always 3 days in the office.
Why are you holding on to the office?
I think the culture is strengthened by those being in an office together.
I would agree.
It really builds like, a fraternity sense. And then I think from a training perspective, openly we hire entrepreneurial individuals that maybe had careers for the past decade plus that weren't in SBA, but are highly talented in financial services or highly talented in consulting or highly talented in, underwriting, but maybe just didn't have that knowledge. It's easier to have everybody be together and learn from each other and build that camaraderie when they're physically together. So
yeah,
I don't see that going away at Windsor anytime soon.
Yeah, I love that. It's just, but you have to be able to hire non-SBA people or you're limited to your market or people that relocate.
SBA has kind of, because we're so unique in what we do, rightfully so, right? We're pretty awesome here in SBA. I think SBA though, because of that, has really kind of dictated that they get to be remote all the time. And there's nothing wrong with that. And maybe if you're at an individual institution, that's okay. But when we're in the business of really providing white glove service to tens upon tens, if not, nearly 100 at times, especially 1502 reporting session of each month of institutions a month, you've got to be able to have that unity and you got to be able to have that culture together.
It's tough because how do you you have 100 plus customers? How do you provide a consistent customer experience to all of them as you're scaling at this level?
Internal communication is key, right? So I think making sure that our teams are consistently working together, consistently communicating, and consistently following kind of a set standard of procedures in-house make sure that we at least have kind of a unified playbook to approach each individual client. And then usually what you'll see with these larger LSPs, us being included, is that certain personalities gravitate to other clients, right? Gravitate to specific styles of lenders, and then they kind of build up together. And so those lenders, they get their teams, right? Which is great. And as long as we can accommodate that, we always try for that. So,
so like you might have 20 underwriters, but only like these 3 underwriters are going to work with this bank.
Spot on, right? Like Ray, really enjoys, closer John, right? And so we try, and Ray continues to offer a consistent product, is respectful. John continues to love working with Ray. So we'll try to make sure that John is always closing Ray's deals if possible.
Interesting.
So yeah, so that's, it's not a call center, right? Like we truly are a partner, not a provider.
That makes sense. That's cool. So, let me ask you this, like, when does it make sense for a bank to use an LSP? Like, is there a sweet spot in terms of how big of an operation it is? Or
yeah, I mean, I go back and forth on that, Ray. So it all depends on the bank, right, and the culture. I have banks that are closing, nearly $100 million a year through us, and banks that are closing $10 million a year. And it makes sense based on kind of what each individual's goals are. You mainly utilize an LSP for a couple reasons. One is lowering your overall kind of like unit level economics, right? So a bank, or I say bank, but a bank, credit union, lender, SBLC, usually can boil down the cost to close a loan, right? I think what they forget about at times is all of the soft costs that go into that, right? All of the subscriptions, all the personnel, things like that. But usually we can come to a level of agreement, right? That we can reduce that unit level economics less than what a bank can close or a lender can close in-house. Others will utilize us to scale. You can typically scale up from 10 to $100 million a lot quicker utilizing an LSP. And then lastly, the point is, a lot just don't have the people, process, or technology in-house, or don't want to invest in that from a risk mitigation standpoint to protect those guarantees. From a size standpoint, what I'm getting at, though, is how much do you want to invest in-house, right? Again, I always say, outsource the work, not the control. There are cultures at our lenders out there that are embracing the third-party outsource model, and they understand that they don't have to invest in all of the people in-house. And then there are others that just feel more comfortable, irregardless of my suggestions. They feel more comfortable hiring the full team in-house over time. And eventually that would make sense, that if they do enough volume and they've hired enough kind of fixed staff in-house, that it might be more cost-effective to begin to kind of wean off an LSP. And we look at that as a success. If we can help a client stand up a division, from $0 to $100 million, and then eventually they decide to kind of take that group in house, I obviously hope they stay with us, but I mean, that's a success in my book, because I know what goes around comes around.
For sure. And yeah, I mean, the huge value would be like the idea of variable costs versus fixed costs.
Spot on.
That's a huge flexibility.
I mean,
unlock.
Think about, we look back right to the Silicon Valley Bank crisis that recently happened, and the fact that basically lending shut down, right? I mean, no banks were lending. Prime was jumping 500 basis points, and those that had recently just invested in that fixed infrastructure had to just sit on the sidelines and burn that cash. Those that had decided to partner with an LSP like Windsor or somebody on a variable cost model could just completely pump the brakes. And they were like, no worse for the wear. They might not have been adding on the revenue, but they weren't incurring that burn. And so there's obviously pros and cons to both, but the variable cost model is highly advantageous when utilized the right way.
Like if you're, let's just say, a $50 million, you're trying to, do, I don't know, 25, 50 million a year. Whatever, yeah. And you're, using Windsor. What type of, in-house SBA dedicated people do you need at a minimum to work to combine with Windsor to create an SBA program?
Yeah, good question. So if you start from the beginning, obviously it starts with the origination model. Are you embracing third parties and strategics? Are you going to build it all in house? Are you paying brokers? And so from a BDO perspective, what's your style there?
Okay.
So you're going to need a couple BDOs, right? You definitely need like a point person to do 25 to 50 million that really champions the relationship with Windsor and then champions the SBA product in-house, right? And so that's an absolute number one. You need a point. You need a point guy, point gal. Always good to have a couple, one to two underwriters if you plan on underwriting in-house. Windsor does underwrite. So then you really just need somebody that really understands the product with credit. But I would say at 25 to 50 million, you should have somebody dedicated that really can champion the product at credit committee. We're obviously not there, right? We can help put together memos, but we don't have an opinion with respect to, suggesting whether or not a lender should take on a 7A loan with themselves. They need to determine that in-house. So there has to be usually a kind of a point SBA department head.
Yeah, like an executive.
You got it. And then somebody in credit that really understands the nuances of the product. They can work with us.
That's a big part of it.
Yeah, spot on, right? And then on the back end, right? We can pretty much handle servicing as long as we can coordinate directly with somebody in the commercial lending group or the commercial servicing group to make sure that they understand the nuances of the 1502, they understand the nuances of the 172, different kind of E-trend reporting requirements, making sure that we remind them to pull down their OCRM report. We don't see those, but they should always put those on file. So, I mean, minimum, I would say like minimum two. Most people you see that have 25 to 50 million of production are doing 5, right? They've usually got some good backups and they're originating most of those in-house. We don't focus on origination. We like to always say we're a compliance shop that happens to do SBA. So yeah, I guess, it's ballpark, but we've seen groups do it as small as 3 and have as large as 10. And it kind of just depends on internal controls and reporting functions within each institution as well.
Well, Chris was here before you, and he said he has 42 people in his division.
There you go.
I mean, it takes a lot of people to do SBA because you need, like, if you were going to design an in-house department, a lot of people are going to say, all right, we want that executive still.
Yep.
We want those BDOs.
Yep.
We want a sales manager, perhaps. Maybe not, but you need a credit manager. Some people also have like a credit director or chief credit officer, closing manager, operations manager, servicing manager, all the, like, you just keep going and going.
Yeah. It can get really intensive really quick. Right. But again, that just kind of goes to style and goes to kind of the institution's comfort with third parties. We like to think we do a pretty good job communicating, offering a massive amount of, custom reporting and transparency and integrations, but it's just kind of it depends. I've seen institutions go 50 million plus with 5 people, and I've seen institutions have 15 that do 5. So you kind of, you got to make sure you find that proper balance. But again, need an intake person, right? Need somebody that can be the forefront of the bank, need a head, need a credit guy or gal to really make sure that you're hedging that risk on the front end at a bare minimum.
I'm looking at my next question here. This one might get you in trouble. We may
comment.
skip that one.
No comment.
Yeah, it's not. We could scrap that one. We'll save that one for Patreon. Do banks ever switch LSPs? I feel like it's a really sticky type of.
Yeah, they do. I mean, it's definitely happened. There's also nothing wrong with utilizing specific LSPs for specific functions, right? I mean, we've got groups. I mean, you're aware we were on the podcast earlier this year. We offer kind of like a small loan fintech closing product. We have institutions that'll use us just for that, but maybe use an LSP for some a la carte stuff elsewhere. So you do see people utilize multiple
when you really
LSPs.
Get intertwined with a shop and your guys are cranking out, 75 million a year and you're with an LSP, you're like in bed with that LSP. It's hard to unravel, I feel like.
Yeah, it is, we don't try to hide what we do, Ray. I mean, for those clients that join us and, they succeed with us, we have no problem sharing the playbook, right? And so should you choose to go a different direction, it's definitely doable. We have clients that have done that in the past. We'll be quiet, no names, but there's people in that top 50 league table that started their their SBA journey with Windsor Advantage and have since decided to take it in-house and grow. And again, I utilize, I think, any of them for a reference. To shift an LSP, we don't see a lot of that, right? Like usually what we see is an acquisition where there's an SBA group already that maybe more beneficial or more comfortable for that institution or that merged entity, or you see someone decide to kind of take it in house, which again is good. Right. I look at it as a success story. Rarely do we see someone say, "Hey, Mike, respectfully, we're going to go to shop A, B, C, but keep it outsourced."
Okay. Let me ask you this: how do you start an LSP?
A lot of hard work. It's a long sales cycle, typically, right? To convince an institution to work with you, to be able to kind of grow a turnkey solution, an outsourced solution.
So you got to start with basically a client.
Yeah, you got to.
But don't you need something with the SBA first, like a 750 agreement?
Oh yeah, well, so the banks do. So no, yeah. On the but on the LSP side, you absolutely need to get in front of OCRM, right? First and foremost, you need to. There's actually not like an 750 agreement or pre-approval.
But they don't have like a license or anything?
No, but you have to go on record, right? You absolutely have to notify OCRM that you are providing a third-party service that essentially replicates certain administrative functions that a bank would do in-house, and then they deem you essentially as an LSP per the SOP.
But they don't regulate you. OCRM doesn't, right?
They oversee us. I think regulates like a unique term, right? But OCRM does have certain, and I applaud this. I think it's absolutely necessary with third parties in our industry, but they have certain kind of oversight mechanisms in place. So there's something called an LSPA submission letter. They also review each one of your lender service provider agreements that you sign with every single one of your clients. And so any sort of contractual agreement that we have with any institution participating in the SBA is sent to OCRM.
That agreement itself is reviewed.
Is reviewed. Okay. Yeah.
But basically anyone could start an LSP.
Any individual who's entrepreneurial enough can absolutely try their luck at starting an LSP.
Oh, maybe I'll start one.
Yeah, art of SBA LSP LLC could be a thing here. You heard it here first, folks.
I was in the exhibit hall today, and you have all these vendors, and a lot of them are new. A lot of them say AI on there.
There are a lot of new tech.
Dude, it's crazy.
A lot of new tech showing up.
It's not your grandfather's SBA conference.
It is different. Anymore. It is different.
Everyone's got.
I love it. I embrace it. I think we need some innovation.
Long overdue.
It is different.
It's crazy
than a decade ago.
Now,
that's for sure.
They're having to sell to banks sometimes for the first time. So imagine selling to banks and credit unions for the first time, which you've been doing.
Yes.
What advice would you give these people that are doing it?
Be patient.
Takes a while.
Be patient. Understand that with any federally regulated, institution, that it's not always like your direct, it's not always like your direct audience's immediate decision, right? It's typically got to go through a board and go through a couple different layers of tape.
Oh, trust me. I know.
And be detailed, right? I mean, be open, be transparent. I mean, I think what most clients really respect is that you realize that most of these third parties are there to support the small business and Main Street community, and we're all there to hopefully make each one of our clients a lot more money. And so be open about it, and just realize that it's probably going to take more than one meeting. So to any vendors out there that want to trade some war stories, I'm happy to do it.
Yeah, how long is that sales cycle? Like 9
juice
months?
Juice is worth the squeeze. But yeah, it's a longer sales cycle than a quick little widget. That's for sure.
But what do you think about the industry now? Because it is, how do investors, let's say just a general investor that's looking at the SBA industry, like how do they see it? How do they view this industry?
Meaning like an investor in a company?
Because I'm in it. So I view it like this all makes perfect sense.
Got it. Like, why do we all of a sudden see like all this hot tech and investment all of a sudden?
Yeah, like these outsiders looking like, hey, this is an industry that, like, what? Finish the sentence.
Yeah, I think it's underserved. Okay, I think, and I actually really agree with it. I think Main Street businesses are underserved, right? I heard some stat, don't audit me on it, that Like something like 7 in every 10 businesses are placed with either the wrong product or denied an application when applying. I think this massive amount of publicly available data with the SBA that they publish, and they should publish, which I obviously applaud, and they do, has the ability to now be leveraged. And I think some of these tech companies are realizing that. And I think there is a massive market out there that is currently being served with wrong products. And I think 7A is a great product for a lot of individuals that currently are not being served because of the amount of either, documentation it requires or red tape that might be inherently just in a single lending institution, that some of these tech companies are starting to try to break those barriers down. And I actually applaud that because I agree with them on that. And in order to get yourself comfortable with investing time in, say, a small loan, right? Small loans are hot right now. It's a hot topic. You got to be able to mine the data and make smart decisions. And we just didn't have that ability like 10 years ago, unless you had a massive staff that could just comb through Excel spreadsheets. And so now that is becoming cheaper to be able to mine that data, I think you're seeing more and more realize that while the SBA has been a great market and continuing to grow, I think there's a massive amount that's undertapped that we're going to see, continue to build here.
And we saw it this year,
next decade. Yeah, exactly. Right. I think year over year, right. We talked about this, like 20% growth, I think, in overall dollars allocated with a 20% reduction in the average loan size.
Yeah,
I mean, that's where it's trending.
The other debt markets that have been popping up the last 5 years or whatever, like MCA stuff, whatever, short-term working capital. In their chart, the APR, if you calculate, it's off the charts.
Yeah. 40 is not bad.
Yeah, I was gonna say 40, but I've seen 100.
Yeah, no, me too. It's debilitating for a lot of these businesses that hopefully could have been served by something different, right?
It is interesting though to see that a borrower is willing to pay that much to get the capital quicker.
Yeah.
Maybe some of them don't even realize it. Honestly, they're not even looking at the papers, or it's written in a way that's kind of confusing because it's not really, there's no consumer protection around it or anything like that.
Right.
But what if the SBA allowed us to charge, let's just say 10 over prime?
Yeah.
To offset the risk of us just flying through these loans, not like PPP or anything crazy like that.
Yeah.
But remove a little bit of here and here and here. And to streamline the program, there is room to increase costs to get that done, to make it a zero subsidy program still.
No, I mean, I agree with that. I think they're starting to make their strides, right? I've been, I think, openly a champion of what the SBA did over a year ago now with the small loan program. I think seeing the dollars allocated and the average loan size drop is a direct reflection of their efforts. I feel like what they've offered with Do What You Do and some other areas in the SOP have cut a lot of that red tape. I think there's probably still needs to be a little bit more, to your point, on kind of the economic incentive side for lenders to offer smaller dollar loans that beat the MCA in the predatory lending world, right? They probably need, unfortunately, or fortunately, they need a little bit more motivation to want to do that.
Well, they could get to prime plus 6, can't
they?
they?
It's getting pretty good. And that's still 10 times better than a lot of these predatory products that these individuals are involved with. But I think the lenders that I'm working with and that I see in our community, we have to have the confidence that stuff won't just change, right? So I think we need to see a whole nother SOP come through and not see a lot of change in the small loan program, right? We don't want to see an about face, or else we could lose some confidence there. I'm not saying that'll happen. I don't think it will. I think the SBA is trending in the right direction.
The defaults are going to play into that. I think
it will. Yeah, for sure. And they're gonna. Defaults are probably going to go up a little bit.
Well,
they released it in what prime went up 500 basis points.
That's what I'm saying. That's the biggest driver of anything.
And a lot of people are really holding on, right, by the skin of their teeth. So you're gonna see a default spike. Okay, it's gonna.
Well, it's spiking from record low too.
Yeah, exactly, spot on. So you need to take the source. But then as we start to evolve through that, as long as the SBA continues to stand firm and embrace what I believe is a pretty prudent SOP currently with the small loan program, and cut those areas of red tape, I think you're going to see more and more lenders gravitate towards loosening some of those standards. I don't mean irresponsibly, right? I mean like cash flow underwriting for a cash flow based product. If you can look in
talking about removing the collateral.
I mean,
yes,
right. We've always said it's a cash flow based product, right? And
so why are we putting second liens on their house?
If you can utilize technology down the line, right, to be able to underwrite a historic cash flow that a business has been able to show you either through bank statements or other forms. And there are APIs and other things that do that now, right? Outside of the SBA, people are lending on these products.
Yeah, you're seeing that.
And it's a cash flow based product. If you can get comfortable with that as a lender, utilize proper tech or resources to underwrite, maybe not directly to tax returns or things like that, but use those tax returns to kind of validate your pre-assumption, you're going to be able to reduce the close time, and you're going to be able to hopefully take some more loans off the street that are going to MCA or going to predatory areas simply because of timeline, right? And we just don't have enough lenders out there that are leaning towards the quick close yet. We're trying to get there. And again, I'm not advocating being irresponsible or not prudent. I'm advocating being reasonable and looking at other products that have historically performed and trying to replicate that with an SBA loan.
Of course, goes without saying, prudent.
Yes.
Always.
Yeah, we're always prudent.
But no, I'm just kidding. But it's a turning point last year. Like, people are starting to wake up, realizing we do need to change. We need to kind of move our industry into the 21st century. And we have been talking about this all season. You've been kind enough to come on throughout the season.
Thank you for having me.
And so thank you so much for coming on.
Thank you so much for having me. I appreciate it. It's been fun.
Awesome.
All right, that's it for this week's episode. If you want more SBA content, you can sign up for our monthly newsletter and check out our sister shows, SBA Today and The Video Show. We'll leave a link in the show notes. And don't forget to subscribe to this podcast so you never miss an episode of The Art of SBA Lending. Ta-ta.